Welcome back. Let me ask you something important. Have you ever tried applying for a loan, credit card, or even renting a house, only to get rejected or offered worse terms than you expected, and later you find out the reason was your credit score? If that has ever happened to you, you already know how frustrating it feels. Because your credit score isn't just a number, it's a financial reputation. It decides how much trust banks and lenders place in you, and it can affect everything from interest rates to financial opportunities. But here's the good news. Improving your credit score is not as complicated or stressful as most people think. In fact, once you understand how it really works, you can improve it step by step without pressure or confusion. Stay with me until the end, because I'm going to show you exactly how to do it the smart way. Most people misunderstand credit scores completely. They think it's something random or unfair, something they have little control over. But the truth is, your credit score is built from a few simple factors. And once you understand those factors, you can take control of your financial reputation. It's not about tricks or shortcuts. It's about consistency, discipline, and understanding how the system works. And once you master that, improving your credit score becomes a natural process instead of a stressful one. So what exactly is a credit score? In simple terms, it is a number that represents how trustworthy you are with borrowed money. It shows lenders how likely you are to repay your debts on time. A higher score means lower risk in their eyes, which leads to better loan approvals, lower interest rates, and more financial opportunities. A lower score, on the other hand, signals higher risk, which can make borrowing more expensive or even impossible in some cases. Now let's break down the main factors that actually affect your credit score. The most important one is your payment history. This means whether you pay your bills and loans on time. Even a single late payment can negatively impact your score, especially if it happens repeatedly. On the other hand, consistent on-time payments build trust and gradually improve your score. This is the foundation of your credit health. The second major factor is credit utilization. This refers to how much of your available credit you are using. For example, if you have a credit limit of $1,000 and you use $800 of it, your utilization is high, which can lower your score. But if you use only a small portion, your score benefits. A good rule of thumb is to keep your utilization low and avoid maxing out your credit cards. The third factor is credit history length. This is how long you have been using credit. The longer your history, the better it looks to lenders, because it shows stability. This is why closing old accounts can sometimes hurt your score, even if you are not using them much. Keeping older accounts open, even with small activity, can help maintain a strong credit profile. Another factor is credit mix. This refers to the different types of credit you have, such as credit cards, personal loans, or installment loans. Having a mix shows that you can handle different types of borrowing responsibly. However, this does not mean you should take unnecessary loans. It simply means diversity can help if managed properly. Finally, there are credit inquiries. These happen when you apply for new credit. Too many applications in a short time can signal financial stress and lower your score temporarily. That's why it's important to be selective and only apply when necessary. Now that you understand the basics, let's talk about how to actually improve your credit score without stress. The first and most important step is simple. Always pay your bills on time. This cannot be emphasized enough. Payment history has the biggest impact on your credit score. Even one missed payment can set you back. Setting up automatic payments or reminders can make this process much easier and remove the risk of forgetting. The second step is to reduce your credit utilization. If you are using too much of your available credit, try to bring it down gradually. You don't need to eliminate all balances at once. Even small reductions can make a difference over time. The goal is to show lenders that you are not dependent on credit for daily spending. Another powerful strategy is to keep your old accounts open. Even if you don't use them often, they contribute positively to your credit history length. Closing old accounts might seem like a good idea, but it can actually shorten your credit history and reduce your score. It's also helpful to regularly check your credit report. Sometimes errors or incorrect information can appear, and these mistakes can negatively affect your score without you realizing it. By reviewing your report, you can catch and fix these issues early. Many people give up too early because they expect fast results. But credit building is more like building trust. It develops gradually over time. The longer you demonstrate responsible behavior, the stronger your financial reputation becomes. Another important mindset shift is to stop thinking of credit as free money. Credit is a tool, not income. When used wisely, it can help you build opportunities. But when misused, it can lead to stress and financial pressure. The key is balance. Use credit strategically, not emotionally. Let's make this practical. If you want to improve your credit score starting today, begin with 3 simple actions. First, make sure all your current bills are paid on time. Second, check your credit card balances and try to lower them if they are too high. Third, stop applying for new credit unless absolutely necessary. These 3 steps alone can start improving your score over time. As your credit score improves, you will start to notice real benefits. Loan approvals become easier. Interest rates become lower. Financial stress reduces. And you gain access to better opportunities, whether it's buying a car, renting a home, or even starting a business. A strong credit score gives you financial flexibility and confidence. If you stay consistent, your credit score will slowly but steadily rise. And once it reaches a strong level, you'll realize how powerful financial discipline really is. You won't just have better numbers, you'll have more control over your financial future. If you've made it this far, it means you are serious about improving your financial life. This is your moment to take action. Don't wait for the perfect time. Start with small steps today and stay consistent. Because every good financial habit you build now will benefit you for years to come. And before you go, if you found this video helpful, make sure to subscribe to the channel for more content like this. We're here to help you build better financial habits, improve your credit, and create a stronger financial future. Thanks for watching, and I'll see you in the next video.